Do you believe that the rally in crude oil is sustainable, or have we seen a top? And then using some of these direction ETFs, what are some of the ways to trade that space?
Well, I'll start off just talking about, listen, the situation remains fluid. Crude oil did hold the 80s last week, even with that temporary ceasefire being announced. Jake could talk about the technicals, but to me, there's going to be a continued premium in crude oil prices with the geopolitical risk that's ongoing. Even if you look at the futures curve, which is in backwardation, what does that mean? Demand is exceeding supply. You go to December on the West Texas futures, you're still talking over $70. So that's something to keep an eye on. In addition to that, when you're looking at right now, the inflows we're seeing in particularly bull and bear on the gush and drip and ERX, ERY, as we mentioned. So volume definitely picked up in that since the war started for sure. And even before the war started, there was a little bit more volume pickup in those leverage energy indices because of the fact that crude broke, it seems like a while ago, above that major resistance point in the low 60s, even before this. One thing I'll also add, we've seen tremendous amount of volume in our COM ETF, which is really the antithesis of leverage and inverse. Our COM ETF is a broad basket of physical commodities that'll be longer commodities showing a favorable price trend in cash with the commodity showing a downward price trend. As you can imagine right now, we're long 11 out of the 12 commodities. Interestingly enough, we're in cash with natural gas. We track an index from a group called Auspice Capital, their rules-based index. We've seen tremendous flows there, but that's for strategic asset allocation. Commodities have rallied in March in particular. The market was down. Even your traditional flight to safeties, gold and bonds didn't perform in March. So COM, for those that are more asset allocation, want to diversify outside of stocks and bonds, that's a place they may want to go that is not leverage and inverse.
How about you, Jake? You have anything on the charts or technicals for this?
Yeah. So I had jotted some notes down, knowing I was going to do this today, and one of the things I wrote down is, are we really out of the woods yet? Right, and clearly we're not. The developments over the weekend. You want to talk technicals on crude? I thought this was one of the cleanest, technicals 101. Crude can be fraught with technicals, but I like it here. We had this really clean uptrend, after the conflict started. What happened was you started to see some diplomacy. We break that uptrend, right? That's the first step. Then we held 90. We got some more diplomacy. The Strait is open on Friday, and we priced out a lot of that uncertainty premium that Ed's talking about, right? So quickly dropped down, towards 80. But where was the high in today's session? Right at 90.91. So that 90.91 level is going to be, a critical line in the sand, so to speak, as we shake out the diplomatic efforts here.
Okay, great, and we'll use some of these different ETFs to trade that. Just like we talked about with some of the tech and chip names, XOMX. This is, I know, one of your bull 2X ETFs. XOM, we affectionately call this ZOM around here. This is another highly traded name here. Great to see you have some ETFs for that.